So here we are making a video on Saturday, which is really rare, but I want to just talk about some things that happened on Friday. There were some interesting things with the moves in the stock market, some inflation, and two stocks in particular that I really quickly want to spend just 2 or 3 minutes on, which I thought made really interesting moves. So obviously on Friday, a weekday, the S&P was down 1%. I think the Nasdaq was down, 1.7%. Obviously Nasdaq down a lot more than the S&P. That makes sense on a red day. But if you actually look at the year to date on the S&P 500 now, it's only up 3%. So you can see here, the S&P is starting to have a really big pullback on the S&P 500. The Nasdaq is still holding on to a lot more gains. You can see here, this is up still 10%, but even the S&P, the Nasdaq is having a pullback of 6%. So I think this is a really needed break. And the reason why we're having this pullback and why we're seeing a bit of negativity creeping at the moment is because this rally here was caused by optimism. Optimism at the start of the year that everyone looks for. Actually, the economy isn't as bad as what we thought. We thought we were going to enter a terrible recession. It's not happening at the moment. And also when people were looking at inflation, inflation was rapidly descending, as you can see here. Now the difference is that during the month of January and particularly February, we started to see inflation starting to stall. And actually when the inflation report came out, you might remember the day that it came out, I made a video reacting to this. I said that this isn't good. The fact that inflation hasn't beat expectations, and it hasn't beat expectations by a lot, is worrying. That's going to put a lot of fear at the moment into, okay, we're being rapidly dropping in inflation, everybody's been getting carried away, the economy's holding up, the Fed are not going to put interest rates up in 2-3 months time. And that was getting priced in. Now when this report came out, I said on the video, I said, this isn't good. This isn't good, and the stock market should have reacted negatively to this. And on the day, I believe the stock market was green. Now, what is starting to happen now is people are starting to catch up on the fact that inflation has stopped rapidly coming down for the moment. Now, because everyone went from one point of view of, oh, everything's amazing, the economy's holding up, inflation's peaking, Fed aren't going to hike up interest rates, we now got the point of view where, and the report that came out on Friday, is suggesting that inflation is still rapidly increasing at the moment, or not coming down rapidly. You can see that a few people at the moment from the rally that we've had are now starting to price in the fact, okay, inflation is actually paused on its descent. And you can see here that the forecast from Trading Economics, the forecast for March or February's inflation data is 6.2%. So you can see here at the moment 6.5, 6.4, 6.2. Inflation has stopped rapidly coming down, and now what's starting to get priced into the markets is that case. And the case is now that everyone went from, oh, the Fed are potentially going to do maybe one more hike, and that hike might be 10 basis points, and then we pause. So people are now starting to price in, the Fed are going to have to carry on increasing interest rates. They're going to have to put up probably 25 basis points, at least this time and next time. Some people are even whispering now 50 basis points. So this is the big change that you're having in the market at the moment. You've gone from really, and this is how quick the market can change. This is what we said earlier. The market can go from really big optimism to really big amounts of fear within a couple of weeks, just like that. And that's what's starting to happen. We've gone from very big optimism on inflation in the Fed to now a bit of fear, or I'd say quite a lot of fear on inflation in the Fed, and that's what's getting priced into the markets, and that's what's happening at the moment, and that's really affecting the stocks, especially a few growth stocks that are getting affected by inflation. So that's the key thing to kind of keep an eye on. Now, the big thing is we won't get any really big inflation data until the 14th of March, so we still have a while, so that'll be on a lot of investors' minds at the moment until that time. And then obviously we'll have the Fed meeting, I think it's like 2 days afterwards, so that'll be very key. Now, because of this fear that's starting to build up around the inflation and Fed, that's caused quite a few stocks to start coming down, and we do not mind that happening, because only a couple of weeks ago, when we look at the S&P 500 and we were up at this sort of range, it was kind of like, oh, there's stocks that aren't as attractive as what they were a few months ago, and you were kind of holding off a little bit. And I think I said at one point on the YouTube channel, like, I'm a bit annoyed at the moment that stocks are going up because I don't have as many opportunities to buy at very good rates. So for me as a long-term investor, I'm happy to see the stock market go down because I get to buy stocks back at cheap prices, which I massively prefer to do in the likes of where we were at in December time. So for me, this is absolutely ideal. And I think even though we've had a rally in the last few months, which has been good, there's been a few stocks that have sold off for a little bit of profit, trimmed a few stocks for profit, which has been good to get a bit of a cash pile. The other thing is that the last few months has taught you how quick stocks can rally as soon as there's some positive data that comes out. And I think people forgot that in 2022. People forgot what a bullish market was like. And I think people had a bit of a taste of like, oh, you know, when's the things do turn around, when inflation does peak, this is how quickly it does rally. So we'll see what happens. Either way, if the stocks go up from here, obviously I'll do okay, but it would be nice for stocks to go down a little bit lower once again, just to buy a few more stocks. So we'll see what happens. Now, because of this weakness in the market, this has caused these two stocks I want to talk about today very quickly, has caused very interesting opportunities in them. Now, the first one being Adobe. Now, Adobe wasn't just because the markets were poor. It was actually that the DOJ is actually preparing to actually block their 20 billion Figma deal. So they were going to buy Figma, and it's looking like the antitrust could say, no, you're not having that. And they seem to be getting a lot bigger at the moment at doing that. They seem to be stopping a lot of the big techs from still controlling everything out there. And one of the big ways that a lot of the big techs have always controlled things is by any competitors, they buy them up. And they buy them up when they're very, very small companies. And it seems like they are trying to get really big on stopping these sort of things from happening. So, Adobe is looking, to potentially buy one of its potential future rivals here, and to take them out of the competition. And it looks like the DOJ have gone, no, you're not doing that anymore. Now, the crazy thing is that I looked at this, and originally when this deal was announced, you might remember Adobe stock absolutely cratered off this news. I think it actually was probably the reason why the stock was down at these sort of levels. It was one of these drops. One of the Figma, when they announced the deal, is what caused the massive drop in the share price here. So to see that it dropped because they were buying them, and then it dropped them because they can't buy them, it was like, hold on. So Wall Street don't want them to buy it, and then it drops, and then they can't buy it, and then it drops again. So it's like, make your mind up. Do you want them to have Figma? Do you not want them to have Figma? So that's what Wall Street can do in the short term, which is absolutely stupid. However, what it could do is it could potentially create a good opportunity potentially to buy this stock. So originally this stock actually hit 52 close, $274. And looking at that, I probably should have bought in that time frame. But never mind, I'm going to be looking at this one because Adobe is a fantastic company. I use, I think, 3 of their products nearly every single day. So I am a big fan of Adobe. I think their products are still absolutely amazing. I think it's a fantastic product and company going forward. So I would like to buy Adobe. The only thing I've ever had with it is the valuation has been always a little bit rich. However, if we do start dropping quite low to that $200 range once again, maybe this time it's one of those that I buy the opportunity on the dip. So I thought this was a really strange move that happened on Friday with the reaction to the negative market and also the Figma deal. So this is one I'm going to be keeping an eye on in the next few weeks to see if that negativity continues and pushes that stock down into the $200 range. The second stock that I thought was really interesting this week is Alibaba. Alibaba was down 5% yesterday. If you look on the 5 days, it's actually down 11%. And this is on you see here, they had a little pop here, as you can see, and then it gave it all back and went absolutely lower. And Chinese stocks started strong this year in the market. You probably would have seen a lot of Chinese stocks were rolling up on the optimism of China and China opening up back up again. And if we go on year to date, you'll see here that the stock was up like 31% at one point, and you can see here that the Alibaba's basically it's actually negative for the year. Alibaba's actually negative for the year after this crazy jump, which was crazy. And the thing is if you actually look at Alibaba, they brought earnings out on Thursday on the close, I believe it was, and actually no, it wasn't. It was Thursday on the open. I've just seen here when they posted it. It was at 6 o'clock in the morning, so it must have been the morning the reported earnings. So on the morning, on Thursday, they brought out earnings, and earnings were fantastic. They were really good. If you actually look at Alibaba, they had a beat by 0.39. That is not a small beat. That's a really significant beat, and the cost cutting they've been doing has been absolutely amazing. And the revenue was a small beat, obviously 40 million on 35 billion US dollars. It is obviously not a massive beat, but the profitability that they've been ramping up is fantastic. And the thing is, you look at this, and when you look at China, the economy is going to probably start opening up. Alibaba's probably going to go back to 7, 8, 9% revenue growth going forward, and that's pretty decent growth. And potentially, with the Chinese economy opening back up again, potentially we see that if we can push up into double digits. But even at 7, 8, 9% growth, there's still decent amounts of growth. And when you look at the cost cutting and the profit they're starting to put in, Alibaba is now trading according to Seeking Alpha. I think it might be a little bit higher than this, but according to Seeking Alpha, they're currently trading at like 11 times forward earnings. So you're looking at Alibaba at the moment going, you're getting a company here that's growing probably high single digits going forward. It's 11 times forward earnings. It's got the opening up from China to come back in here. And you're looking at this company here that's doing all right through what has been a really bad situation for a lot of Chinese stocks here. And some fantastic earnings, but yet the stock was down on this day after reported earnings. down 11% on the week, and after all that optimism in China at the start of the year has given it all back. And I'm looking at Alibaba at $89, and I'm thinking, I might have to have a nibble in the next few days. I thought this was a really big overreaction drop. So this is potentially that I potentially look to buy this one, I think, next week, because I thought this drop was a little bit crazy. So if I do buy it on the Patreon, you guys, I'll let you know. If I do buy it, it'll probably be one of the Monday buys that I put in. So I'll keep you guys updated on the Patreon if I do pull the trigger on that one. But yeah, just thought I'd talk about the weak markets at the moment, the inflation, and two interesting opportunities that I'm seeing at the moment in stocks. One that I would potentially like to go a little bit lower, but I think it's going very interesting, and one that I think potentially could be really massively oversold after some good earnings anyway. So hope you enjoyed the video. Have a great weekend. Catch you in a bit.